Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 daily chart for the E-mini futures, and yesterday was a day for the bears. There have been a few areas that we've really talked about this week, and each of them came into play yesterday at a different point in time. Here's the 15-minute chart. We've been talking about 2113. It had been support a couple of weeks ago, and last week it had tried to be a floor. It broke below, and what we saw developing in the overnight was resistance up in that area. It was R1 off of the daily pivot, and you saw an inability to get above it in the overnight. It broke lower. It gave us a chance to get involved up in that area, up in the area of 13. Then the weekly pivot got involved. The weekly pivot was lost, retested, and then it failed. Takes us down to our proprietary level, which was tested, failed, went back, retested, and went to a lower low. So for our little corner of the market and what we like to do and how we like to trade, yesterday was pretty much an ideal day. It gave us three big areas on our chart to either get involved, add back, or add back to an already existing trade that's working. So what we're seeing, or what I'm seeing in the overnight tonight, is another struggle with the daily pivot. Daily pivot is the purple line here. You see an attempt right here to hold 2101, which was a problem yesterday. Then you see a lower high versus 2104, and now we're seeing some move down. I would be very surprised if we did not test at least 93.5 to 91.5 in the regular session. 93 to 91.5. 93 is the 50-day exponential moving average. 91.5 is yesterday's low, which is one of the levels on our support and resistance chart that we give to our members each day. If it breaks below 91.5, then I'm looking for 88, and then potentially a move down to the middle band. I'm going to reserve judgment on what the middle band is going to do if and when we get there. One of two things is going to happen. If it holds, then headed into next week, this all starts to look just like kind of an orderly move down to middle band. I would be very strongly in that camp if one of two things had happened up on the highs, either making a new high or engaging the upper band. As you can see here on the daily, we did neither. You got 34. You got a higher low at 26.25 versus here, but I'm not really all that impressed because it failed it so quickly. It's in the zone of like a lower high double top kind of a deal, which is what the bears really wanted up there. And we didn't engage the upper band. So we did lower band, middle band, nothing. And the last time we did lower band, middle band, nothing, we didn't really stop for very long at the mid band. Now, a lot of that had to do with Greece. There's no massive news driver in the market right now, at least not that we're aware of. So I'll be very interested to see what happens when we get back to mid band. If mid band doesn't hold again, then that continues to plant seeds, at least in my mind, that the slow transformation from macro uptrend market to two-sided market to something with a little more of a bearish lean is slowly beginning to develop over time. So we can talk about that next week if and when we get to the middle band. But for today, watch 91 to 93, watch 2101 on the up, watch 2107.70, weekly pivot always, because the bulls aren't going anywhere if they can't take out that weekly pivot. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. And come check out Spring Hill Jack and Stan DeBosny, who are doing a free webinar over at their website, artofchart.net. This Sunday. Go sign up for that and just learn a ton about charting and see just how impressive their work is. I'm really looking forward to it personally. All right, everybody have a fantastic weekend. I'll be back Monday morning with another webcast. Trade them well, everybody.